Hi, I'm Lee from Lee Terrio CPA, and today we're going to discuss the new overtime taxation rule introduced by the One Big Beautiful Bill, sometimes called the OBBA. If you're an employee who works overtime or an employer managing payroll, this update could have a big impact on your taxes for the next few years. Let's start with the basics. For tax years 2025 through 2028, the One Big Beautiful Bill Act allows individuals to claim a new above-the-line deduction for qualified overtime compensation. This means you can reduce your taxable income by up to $12,500 per year if you're a single filer, or up to $25,000 a year if you're filing jointly. This deduction only applies to the premium portion of overtime pay required by the Fair Labor Standards Act. In other words, it's the extra half-time pay you earn for working more than 40 hours in a week, not the full amount of your overtime wages. For example, if your regularly hourly rate is $20 and you work overtime, your overtime rate is $30 per hour. The deduction only applies to the extra $10 per hour, the half portion, as required by federal law. There are income limits too. The deduction starts to phase out if your modified adjusted gross income is over $150,000 for single filers or $300,000 for joint filers. Employers, you're going to need to track and report qualified overtime separately on W-2s and 1099s. The IRS is rolling out new reporting codes for 2026, but for 2025, you can use reasonable estimates, and there's a transitional relief if you make a good faith effort to comply with the law. It's important to note this deduction doesn't change how overtime is taxed on your paycheck. You'll still see the taxes withheld as usual. The benefit comes from when you file your tax return and claim the deduction then. To recap, the One Big Beautiful Bill Act deduction is available for tax years from 2025 through 2028. It covers only the Fair Labor Standards Act mandated half premium portion of overtime pay. The maximum deduction is $12,500 for single filers and $25,000 for joint filers, with some income-based phase-outs. Employers need to require with qualified overtime, employers must report qualified overtime separately, with new IRS codes coming in 2026, and the deduction is claimed on your tax return, not through payroll withholding. If you have questions about how this new rule affects you or your business, be sure to review your payroll records and keep an eye out for updated IRS forms. Thanks for watching, and stay tuned for more tax updates.